Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies and MULN Automotive. We will be analyzing 3 articles, to where the first one is titled, Sofi Technologies May Report Negative Earnings. Know the trend ahead of next week's release. After that, we'll be analyzing an article to where the author is comparing 2 fintech companies, which are going to be Sofi Technologies and PayPal. So we'll be discussing which of these companies are a better buying opportunity considering the overall stock market, and this is coming from a CFA, or a chartered financial analyst. Lastly, we'll go over the latest news update for MULN Automotive regarding why MULN stock is still surging off of their announcement to where they have a contract that is increasing their presence in Washington, D.C., which is increasing the overall share price. So for more videos just like this one, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. Sofi Technologies is essentially a digital bank, and they are anticipated to deliver their results on May 1st. When an earnings result comes out, we are anticipated to see some impact on the overall share price. And if it's a positive earnings report, clearly the share price is going to go up. And if it's a negative earnings report, clearly it will go down. But right now, this article will discuss if this will be positive or negative for this overall stock. Currently, Sofi Technologies is actually anticipated to deliver a year-over-year increase in both their earnings and their overall revenues. The consensus estimate right now looks good for the company in general. However, like we said, this is going to impact the overall near-term stock price, meaning that they believe that it will increase in price on May 1st. The stock may move higher due to a number of factors, but the top factor will be if they beat or at least obtain the earnings or revenue which they are predicted to bring in. On the other hand, if they miss earnings or revenue, clearly this is going to cause the share price to drop, making it, in my opinion, a better buying opportunity as long as you are not already overexposed more than a 5% initial allocation. Currently, Sofi Technologies is set to post a quarterly loss of 8 cents per share in the upcoming earnings report, but that would actually represent a year-over-year increase of around 42.9%, which is very positive. On the other hand, their revenues are expected to come in at around $441.7 million, which equates to an increase of around 33.7%, which is also very impressive as long as they actually bring in these metrics or potentially beat these financial projections. The consensus earnings per share estimate for the quarter has been revised, increasing by around 4.08% higher, which is very good news, meaning that analysts, as new financial metrics come in, they're actually increasing their overall prediction. But despite this, Zacks Rank has a 3 rating on this company, and Zacks has a proprietary ranking system which ranges from 1 being a strong buying opportunity to 5 being a strong selling opportunity. So clearly that would mean that 3 is a hold rating for Sofi Technologies. However, if you are a stock trader, you could actually see this company gain as long as they beat their overall metrics, and from what we talked about, it seems that these metrics are indeed rather positive, which is great news for Sofi shareholders. Now let's compare Sofi Technologies to PayPal stock. The market has been very volatile as of late due to high inflation, rapidly increasing interest rates, and the threat of a prolonged economic downturn. And all of these factors have combined to decrease the valuation of various fintech companies such as PayPal as well as Sofi Technologies, which are currently down 76% and 77% respectively from their all-time highs, meaning that both of these companies are trading at a phenomenal discount. So let's start with Sofi Technologies. Sofi has done an amazing job by growing and attracting customers, increasing their revenues year after year and quarter over quarter, and of course they are pressing toward profitability. Just from the fourth quarter of 2019 to the same period in 2022, Sofi has grown their overall customer count from 976,000 to 5.2 million. That is clear evidence that this company is not only a very strong company fundamentally, but they will continuously grow because customers seem to love their products and services which they are offered by Sofi Technologies. I also want to make sure that you are aware that the company is on a solid growth trajectory and they are bringing in positive progression toward profitability, which could be achieved on a net income basis by the fourth quarter of 2023. Investors actually might want to acquire shares right now before they become profitable, because after the company becomes profitable, that's when their share price is really going to start to take off. So if you are not already overexposed to this company, your window to buy this company at a cheap price is slowly diminishing. Now, what about PayPal? Well, PayPal has already established itself as one of the market leaders in the payment services technology space. And of course, they are anticipated future growth as well, but their current share price is trading at a huge discount compared to their highs, meaning that this company is also a phenomenal buying opportunity. The company right now is buying back and retiring stock, which is going to act as a phenomenal catalyst for their overall earnings per share, considering that it reduces the total number of shares outstanding, which is going to move their earnings per share higher. This means that they are not only going to beat on their overall earnings per share projections for their next earnings report, but by the company buying back and retiring their own stock, they believe this company is going to be worth more in the future. Despite economic challenges, PayPal is strongly already profitable. And despite these large sell-offs, it just makes them a better buying opportunity, because over the long term, investors have crushed overall market returns by investing into PayPal. Currently, they are also just trading at roughly 15 times this year's projected earnings, meaning that this company is looking relatively cheap compared to their prior years. This again makes it a great buying opportunity for investors who are willing to hold this company for the long term. So despite macroeconomic pressures, PayPal is still very profitable and their business continues to hold up well despite the economic volatility. The company still managed to bring in around $7.4 billion worth of revenue in their fourth quarter, which would equate to a 7% year-over-year growth rate, and considering that this company is already a massive company, a 7% increase in their revenues is very impressive. So when we compare both of these companies, they are very different. They do different things, and I honestly own both of them in my portfolio. However, this will depend on what type of investor you are. For instance, SoFi Technologies has a smaller market capitalization, which means relatively speaking that this company has greater growth potential over the long term than, say, PayPal, considering PayPal is already a large cap company. However, if you are trying to weigh risk to reward, the risk to reward profile is in PayPal's favor, considering the company is already very profitable and they are still growing. Luckily, both these companies are trading at a discount right now. Just make sure to not buy too much, because if you overexpose yourself to either of these companies, that would be improper risk management, and I don't want you to be taking on unnecessary risk of potential losses if you don't need to. Therefore, always make sure to do your own research to make sure these companies align with your own investing style and your risk management policies. And the main point of the game here is to acquire fundamentally stable and resilient companies while they are cheap. So that is what I have to say when we compare PayPal to SoFi. SoFi is clearly more risky. However, since they are approaching profitability, this company's share price should pop if they stay on track for their overall financials. On the other hand, PayPal is already more stable and profitable, making it a better risk to reward profile in these very volatile macroeconomic times, but depending on the type of investor you are, I will leave that decision up to you. Lastly, let's do a follow-up video on the latest news updates for MULN Automotive. MULN recently announced a contract in Washington, D.C., and the article states that shares of MULN Automotive, ticker symbol MULN, opened higher by around 8% following their announcement regarding how MULN Advanced Energy Operations, also known as MAEO, would install its energy management module, also known as EMM technology, on Chevy Bolts within Washington, D.C.'s government fleet. And this is very good news, to where the CEO of MULN Automotive even commented by saying, and I quote, "The DC City project is the first of many that we have planned for the new EMM technology." So this then begs the question, what does this EMM technology do, and how does this benefit MULN Automotive and their overall share price? MULN Automotive right now is trading the highest it's been for a while because they are a penny stock. And a lot of this is due to their EMM technology. For instance, in March of 2021, Element Materials Technology, also known as EMT, concluded that specific vehicle testing showed that adding MULN's EMM technology to Chevy Bolts increased this electric vehicle's range from 269 miles up to 431 miles, meaning that these EMM units and technology positively impact overall EVs and electric vehicle ranges, which is extremely impressive. Meanwhile, it appears that MULN also has several other action plans lined up already. In our last video, we talked about how EV Technologies founder and chief scientific officer named Lawrence Harge appeared on a live stream, and he teased a $10 billion contract with Saudi Arabia that has been already quote-unquote agreed upon. However, MULN has not verified these claims, and the reason why we would care what Lawrence Harge and EV Technologies does is because EV Technologies, MULN, and Global EV Technology are all in a joint venture, a part of MAEO, which stands for MULN Advanced Energy Operations, where MULN owns 51% stake in that entity, while the other two parties share a combined stake of 49%. So this is why MULN Automotive indirectly gets phenomenal news due to this joint venture and this $10 billion contract. So overall, this is very exciting news for MULN. For me personally, I don't think MULN has proven themselves to the degree in which I want them to, but in the meantime, I do like how MULN investors are getting some kickback on their original investment. However, I am not a MULN shareholder. I am not going to buy MULN until they either A, become profitable, B, start selling vehicles at a very substantial rate, or C, show that they have a very strong balance sheet, income statement, and cash flow statement. So with that being said, I would love to hear your thoughts about any of these news updates regarding SoFi Technologies and MULN Automotive or MULN stock. Remember to go and annihilate that like button, and tell me if you want more videos on SoFi stock, ticker symbol SOFI stock, or MULN stock, ticker symbol MULN stock. And lastly, don't forget to subscribe if you are new for more videos just like this one, and I will see you in the next YT video.